There's one guy in particular, I don't want to say his name, but he's just one of the biggest names, and he'll call me up. Why didn't you include me in the story? Well, he's a billionaire. He could afford islands. I don't know why he cares that he's not mentioned or mentioned in a story, and yet they do care. So they're like you and I.
Hello and welcome back to another episode of Two Blokes Trading. Today I'm honored to be joined by Gregory Zuckerman. He's the journalist that the world's most secretive traders trust. Gregory has spent over 25 years at the Wall Street Journal, breaking billion-dollar stories from the London whale to the fall of Bill Gross. He's the best-selling author who revealed John Paulson's 15 billion housing bet, Jim Simon's 100 billion quant empire, and chronicled the race for a COVID vaccine.
I traded a little bit on my own and lost whatever money I had. I'm really glad I didn't stick with that career.
How much is AI actually transforming journalism?
I don't agree with, 70% of what it comes back with, but 30% of the time, it really helps me a lot. You look back on it, and it's amazing how many people on top of the world just topple and make a mistake. You become a billionaire. You only have yes men and yes women around you and no one to question you, no one to challenge you. That's always what brings people down.
How did you get these guys to open up and share their stories with you?
My goal is to find a reason why people should want to talk to me. There's somebody right now for a book of mine who won't talk to me. He's probably the most famous investor in the world.
Greg's work is studied by traders worldwide. And today, he's taking us inside the minds of finance's most powerful players. Gregory, thanks for joining us here today on Two Blokes Trading podcast. It's a real honor and special to have you on our podcast today. So thank you for taking the time.
Great to be here.
Awesome. So obviously, you've got a really awesome background. I've done a lot of deep research on what you've done, and I didn't know where to start with this interview, I'll be honest. So you obviously fell into journalism. You've done an economics degree. I think you wanted to be a banker maybe, but how did you manage to get into journalism?
So I stumbled into it. I wanted to go work on Wall Street and neglected to spend any time in finance in college and university. I worked in camps. I like kids, I like sports. But I did pretty well in school and figured, all right, I'll just head to Wall Street and get a job. And I couldn't even get an interview. It was a bad time on the street. It was a couple years after the 1987 crash. They weren't really hiring, especially people with no connections and no backgrounds in finance. I read a lot about Wall Street, and I traded a little bit on my own and lost whatever money I had. I had some bar mitzvah money, very little, and I blew it all trading. But I loved this thing. So I got to Wall Street, couldn't get a job. I stumbled around for a few years, tried some businesses. I started some businesses, and some were mildly successful. The others outright failures, and needed a job. And then I saw an advertisement. Back then in newspapers, they had advertisements for positions, and it was to be a journalist, to be a financial journalist. And I took a test because I didn't have any clips, as they say. I had no experience in journalism. I just love journalism. I read a lot. I love newspapers. I was an obsessive newspaper reader and books and such. And I went in there and I took this test, and I did well on the test, not because of my writing. I thought it was because I did a pretty good job on this writing test, but it was because I was good on the phone talking to the source. And the source was my potential editor. So I kind of stumbled into this thing. And I remember taking that test saying, well, they'll pay me to write about Wall Street and finance and trading. How much fun would that be as a career? So I'm grateful. I just sort of fell into it.
It's funny because I know a lot of analysts that don't actually trade themselves at all, but have such a love and passion for the markets that they just love writing about it. And actually, it's quite strange to me that somebody wouldn't trade, but yet loves the market so much. And sometimes that can be from previous experiences, or sometimes it's just like their risk exposure and other things can kind of get in the way. Are you still currently trading yourself?
Well, I'm at the Wall Street Journal since 1996, and we're very limited in that regard. So I don't really trade, but I do have to say I have an awful temperament to be a trader. So I'm really glad I didn't stick with that career, that side of things. You have to be somebody, as I'm sure you know, somebody who can kind of leave it at the office, as it were, not bring it home with you. Sure. And I'm more of a writer. I've got anxiety and angst and neuroses and obsessions. And it's hard for me to leave stuff at the office. I literally bring my work home with me. So I think it worked out for the best.
Yeah, you can't see in front of me, but we've got padded walls here in the office.
Yeah, love it. Good, smart.
And tell me, this nearly 3 decades, working in financial journalism. That's an incredible career within that. I mean, has it changed a lot since you first walked in the door?
It's funny, it's changed a lot, and yet it hasn't changed, meaning that the technology obviously is so much faster. I'll never forget. I remember this was years ago already at this point where I filed a story on my computer and I had CNBC right next to me back then on my little cubicle. And then it went from my keyboard to my editor, sent out there, and then CNBC was talking about it minutes later. Just technology there to think about how fast these things move, and we have in some ways more competition. We've got everybody online and our traditional competitors and such, and things are faster than ever. And I used to write for a newspaper, and now we don't even think really in terms of the newspaper. It's just continually getting it out there and sharing it with readers. That said, most of my best stories are still developed the same kind of way. Someone gives you a call, you hear something over lunch with
Traditional.
someone. Yeah, meeting people still is more valuable than ever, more valuable than ever. It's a skill that a lot of younger people don't really cultivate, but we emphasize and I encourage, and just getting into the office and talking to people. So things have changed in a lot of ways too.
I think the next generation are losing that capacity to, that face to face capacity. And I think that's a dying art, but it definitely needs to stay with our next generation coming through for sure.
Yeah,
So
I agree.
you've obviously broken some market moving stories. I mean, how do you weigh timing versus verification when billions could potentially swing?
It's a tough question. I remember I was working on this is years ago, the London whale. I don't know if you recall that, but J.P. Morgan had a trader who had put on a lot of risk for them and was losing money, and the bank, it was jeopardizing the bank's, well, I mean, not the bank's health, but billions of dollars were at risk. And I knew there was competition. I knew Bloomberg was writing something. You had to get it right. You wanted to be the first one out there. You have to weigh these things. And at the end of the day, first and foremost, I don't mind getting beat. I want to make sure everything we write is accurate. We have to,
Yep.
we emphasize that in the journal and my book writing as well. So accuracy is foremost priority. I've seen too many examples of people just putting stories out maybe a little bit too prematurely, and it costs you, and you don't want to make any mistake. You can jeopardize, you could raise questions about a story you write as a journalist just by a misspelling, and I'm an awful
Mm-hmm.
speller. Thank God for a spell check. But you'd be surprised, it calls on when I read a story and I see a grammar mistake, kind of raises a question on the entire thesis. So we want to get it right first and foremost, but if we can beat the competitors, that'd be great too.
Sure. And I want to touch upon AI a bit later in the podcast, but how much is within journalism, how much is AI actually transforming journalism?
It's fascinating because in an hour or 45 minutes, we have a luncheon about AI, and we've been emphasizing AI a lot, and both the risks and the challenges, and also the opportunities. In a lot of ways, again, it's transforming things. I use it a lot now, more in my book writing than with my reporting. I use it to critique my writing, and I will cut and paste and ask ChatGPT to critique it. And I don't agree with, I don't know, 70% of what it comes back with. A lot of cliched kind of stuff and bad writing, but 30% of the time it finds something I did. I repeated something, a word choice or a theme that was unnecessary within that section, or maybe it's not as clear as I think it is. It's been really helpful. It slows me down,
Mm-hmm.
but it really helps me a lot. I mean, ChatGPT is unbelievable in that regard. And within seconds, I can critique a whole section of writing.
Yeah.
But what ChatGPT does is look backwards. And what we try to do as journalists is break news and tell you something you don't know. And ChatGPT can't tell you the kind of things that Greg Zuckerman hears over a lunch, over a drink, or somebody calling me up, or I call somebody, and in the middle of a conversation, he or she mentions something in passing. So in some ways, we're protected a little bit in that regard relative to some other careers and professions.
Sure. I mean, it's about utilizing it in the right ways and not misusing it, right?
Yep.
That there's the balance. And like I said, 30 years in the industry. I mean, it's a long time. I mean, do you ever get
I am
bored of it?
old. Yes.
No, you don't look old, and I know you got teenage kids, right? And I've got an 18-year-old now as well, and
Yeah. Oh, nice.
but But how do you not get bored of what you're doing? Is it just like you're constantly getting new stories? Do you get excited by the next new story? What keeps you going as a journalist?
Yeah, maybe I should be more bored than I am. I'm very lucky because I have a position at the Wall Street Journal where I can roam a little bit and I go where the action is. So I don't know, a few years ago it was biotech and the development of the COVID vaccines and the companies doing it. And the great thing about finance, and I'm sure you and your viewers and listeners will appreciate, the beauty of finance is it involves every industry. So something important is going on, I don't know, telecom world or bankruptcies or something, I've got an investor. I can find an investor that's in the middle of it. And along the way, I learned. So I knew nothing about biotech and vaccine. I mean, a little bit, not about vaccine development, but I threw myself into it. And there's always, and I ended up writing a book about that issue and the history, the fascinating history of these people. So
And what's the name of that book?
that's called A
Sorry.
Shot to Save the World. And I'm proud of that because it was a hard book to write, but to me, there was the scientists and the researchers and the entrepreneurs who developed these vaccines for years,
Mhm.
mRNA technology, and it's an interesting history. I was able to. I was grateful that I was able to talk to so many of them, and there's some interesting lessons there. But everything involves an investor at some point. The capital behind every innovation and
Mhm.
revolution out there. So fracking and the energy revolution. A few years ago, I was like, wait, we in America are producing so much oil and gas. How the heck did that happen? And again, I didn't really know anything about that industry. So I'm a curious person to the point where it can be annoying to live with me and be married to me. Trust me, I'm sort of notorious. You put me down at a barbecue or a dinner party or a bar mitzvah or something, and I'll talk to the person next to me and find some really interesting story. And I find everybody has a great life story. I'm really big believer in that. And it's my job as a journalist to find that. In other
Sure.
words, they've overcome something. There's been some challenge, some lesson that,
Mhm.
and I'm a relatively selfish person. So I do this to learn from people and
Yeah.
from these industries. So that's why I don't get bored because there's always something. Like right now I'm writing about crypto a little bit and the people and I find they're interesting characters, but also I'm learning along the way. So when I get bored, I move on to some new industry.
It's like emotional intelligence, right? We're constantly trying to pull information from people that are doing different things to build that intelligence and build that information. And that, I guess, as a journalist is absolutely key. But I mean, you've had a lot of scoops, right? Is there one particular scoop that you're extra proud of out of all of them?
London Whale, I'm very proud of. Early on, right away, JP Morgan and Jamie Dimon dismissed my reporting and called it Tempest in a Teapot and can't really, it's not possible. And they ended up, he called me up literally to apologize at one point. And I was so furious at the way he was dismissive of me. I didn't even want to take his call. I was really so upset. So that was a good one. Early on, when I was even before the journal in 1996, I broke a story about Michael Eisner and Michael Ovitz, who were running Disney and how they were fighting. And Disney called me up and said, Greg, you've ruined your career. It's not true. It's not accurate. No one's going to want to hire you after the post. You ruined your reputation. And thankfully, and that was nerve wracking, but thankfully my reporting was borne out. Those two split up. And I wrote with a colleague of mine, we wrote early stories about the big investment firm PIMCO and the fighting going on there. I do a lot of writing about fighting about people. Tension on Wall Street is an age-old topic of interest. So Bill Gross and Mohammed Al-Arian behind the scenes were really having difficulty, and we wrote story after story after story about just what was going on behind the scenes. And it was a shocker to us when there's a story when something arises that shocks me. I'm like, wow, that must be, if it shocks me, then it's probably going to be an interesting story for the reader, I figure. So those are, I guess, among those that I'm proud of.
And there's a fine line within being really successful and it all falling apart for like
Mm.
such small things, right? Because you're dealing with really powerful people that can really turn a screw on you if they want to, you know?
Well, you hint at something that I've found in my career that you look back on it, and it's amazing how many people on top of the world just topple and make a mistake, be it personally, make some decision that brings them down, or often is the case, they just get too big as investors. I mean, I wrote a book about John Paulson. I wrote stories about him and his subprime trade, and just got too big and took on too much money. And I see it over and over again. You become a billionaire. You only have yes men and yes women around you, and no one to question you, no one to challenge you. And you figure, I can take on more AUM, and that's always what brings people down. Just taking on too much money, and that's the beauty of Jim Simons, this investor that I wrote about in another book, and in that they kept their fund relatively small, and I admire that. They could have taken on billions and billions and billions of AUM and didn't. So that often is what leads to people's reputations crumbling as investors. They just underperform and make dumb mistakes.
Sure. I'd say there's been some memorable experiences, like, do you have any funny stories, surprising moments, encounters that kind of just stick with you?
Funny moments. Yeah, I mean, that's a good question. I should have thought about that. I mean, over and over again, I've got people who insult me that I get it. I'm amused at this point. So Jeff Gundlach, who's a big investor, bond investor, one of the biggest right now on Wall Street. I wrote a story. It was so benign and innocuous about how he had been doing really well and now not doing as well. It was just the numbers were the numbers, and AUM had plateaued, flattened out. And he went on a conference call with his investors, his clients, thousands of clients, and he referred to the story and he said, the story written by that Mother Zucker. My name is Zuckerman. He called me Mother Zucker. And then I got an email after I wrote a book about the energy revolution, and this guy, Harold Hamm, was a key character, and he sent me an email, Mr. Suckerman, which is, I don't know, I find when they insult me, it's kind of amusing. Yeah, I don't know, I kind of find that amusing.
And obviously, look, you've interviewed like billionaires. That's what you do, right? Finance legends. How do you get these guys to open up and share their stories with you? Obviously, it's a balance between how much information these guys will actually give, but how do you get them to open up?
Generally speaking, I collect compromising photos, and I just kind of threaten. No, listen. I'm at the Wall Street Journal, so I'm privileged. I don't know if they would talk to me if I wasn't here.
Sure.
But it's a great brand. It's, I believe, the most accurate publication out there, and I think a lot of. I mean, there's always. My goal is to find a reason why people should want to talk to me. I mean, there's somebody right now for a book of mine who won't talk to me. He's probably the most famous investor in the world, but I think eventually he will come around. I'm not begging anyone. I'm not asking. They should want to talk to me just to make sure what I'm writing is accurate, to have their side of whatever it is shared with the world. Eventually not always, eventually they come around.
And I suppose, look, what's the one big thing about hedge funds or billionaires that that's true, but maybe many traders wouldn't believe that could ever be true? Is there any particular thing that you find with these guys that just give them the edge, makes them slightly different?
Well, they're insecure more than you would think. You talk about something that's not understood. They're insecure. There's one guy in particular, I don't want to say his name, but he's just one of the biggest names, and he's got one of the best track records, and he'll call me up. Why didn't you include me in the story? Well, it wasn't really relevant to you. Yeah, but I have a better record than that. And this guy he's a billionaire. He could afford islands. I don't know why he cares that he's not mentioned or mentioned in a story, and yet they do care.
It's such
so they're like you and I.
Right?
Yeah. The funniest thing is also, it doesn't happen as much anymore. Well, I used to cover the hedge fund business per se, and we would get criticism. I would get criticism. Why are you so negative? You're always so negative about the industry. You always write negative stories. The stories, more often than not, came from people in the industry. They would call up and say, hey, did you hear this? Do you see that? Blah, blah, blah. And then why are you so negative? Well, you guys are feeding me these stories. So, yeah.
On the flip side of that, though, do you think there's something that has made them successful, like that successful? Like, what is there a trait that you see by standing in front of talking to these guys? Is there anything different in terms of like maybe where they've got to, how they've got there?
I know you're looking for, I'll come back to it, but my cynical response is they present really well. They present really well. So there's not that much alpha out there. So you're catching a jaded journalist in the latter part of his career, I suppose. And
nepotism.
No, I don't know, not so much nepotism, but it is sad to me how much AUM that alternative managers manage because so many of them underperform. And as a result, our pension funds, insurance companies, charities are squandering money. Now, listen, the best of the best blow you away, blow me away with their intellect and their diligence, and they're hardworking. And I'm going to give one example. David Tepper. David Tepper. When I talk to him, I feel dumb, and there are very few people. Not that I'm so smart, but there are very few people that I feel dumb around when I
Mhm.
converse with them. He's like, Greg, did you saw what the ECB said, the language in their statement a few days? I'm like, no, I missed that. So the best of, and he has one of the best records, and so the best of them blow you away, or blow me away with their intellect and their passion for this thing, for investing.
And their work
And
ethic.
there's work ethic, yep, super smart. And they think outside the box. They think a few steps ahead. So I'm not even going to pretend I couldn't do what they do or what you
Mhm.
do. I'm not as good. I'm really good at telling you how something happened. I'm not good at telling you what's going to happen. People sometimes, I give speeches and such, and they're like, what's the next big trend? And I'll throw something out there, but I'm not good at that. You got to know what your competitive advantage is. So I'm really good at synthesizing complex themes and making it, simplifying it for people, and especially for the regular readers. And I'm proud that I didn't grow up a math and science person. My late father would be so amused that my books are often math and science, and those are the subjects I had such a tough time with. But I have learned that you can learn all this stuff. You find the teachers, and you put enough work into it, and you spend time. I mean, I wrote a book about the vaccine development. I didn't even know how to sell. I had to go back to biology and relearn all this stuff. But you really can learn about that stuff. But some of these people are just thinking a few steps ahead and where
Sure.
things are going to go in the world. The Stan
Mhm.
Druckenmiller kind of people, and again, David Tepper. I have all kinds of respect for that.
Sure. I mean, we touched on it earlier on, but I mean, you are releasing market moving stories potentially, and that's one thing that what that's going to happen to that market before it's going to happen potentially by writing something, right? So it must be quite hard, and we have to be pretty, I suppose, what's the word? I mean, to not want to or feel like, oh, I could actually benefit from this. You have to stick to a very strict kind of a idea. And I look, you 30 years in the industry, it must be tempting at some stage.
Yeah, that was relevant. I used to write the Herd on the Street column, which is one of our trademark columns, high profile ones. And back then, especially, I would write about specific stocks, and you would think it would move the stock. Something often it did. And right, there was the potential, but risk and reward. I mean, my reputation is all
Yeah.
I have. And you'd be surprised. It's a small world of finance, I guess, maybe. And I don't know, in general, and I don't know. I'm always amazed and stunned by people who act poorly on the way out the door of a job, let's
Yeah.
say, or just interact with each other on a day-to-day basis in a poor way. And I don't do it for that reason, but my reputation is all I have. So I could screw a source or someone easily on a story, and it would be a great, and it would help the story. I'm not doing for I don't. I also want to look myself in the mirror. I also want to be able to sleep at night and treat
Sure.
people properly. But yeah, my reputation is all I have. So if I did insider trading, which would be
Mhm.
illegal, and I would never do it, but it's just not worth it. And let's say even I knew I was going to get away with it. I don't know, your reputation is all you have in life. So I try to keep that in mind. And it goes back to the earlier point, and you hinted at it too. How many people just kind of blow it? Like they're on top of the world. They've got all the money in the world, and they just push the envelope and
Mhm.
mistreat someone or take advantage, and just not worth it.
Unfortunately, this industry is this, especially for the retail trader. They're so unprotected with what is put in front of them. Everybody wants to sell this story of get rich quick, make money here, do it this way. And it's one of the reasons why I stick to this podcast and
Mm.
try to give our listeners some kind of encouragement that, look, guys, this is something that you can definitely make money from. It's definitely it's a skill that you have to learn like any other skill. And like that, I have to go home I've got a family, look my kids in the eyes. I want to stick to that. And my reputation is absolutely that. And in the same way, I suppose that you have to protect yours. But going back to some of your stories, obviously you've done quite a lot throughout your career. One being the man who solved the market. And that's about Jim Simmons, right? And how he launched the quant revolution. Like, how do you foresee AI further revolutionizing the trading space going forward? Is that something that I know you know a lot about it. You wrote a book about it, so I'd love to pick your brains on it.
Yeah, it's fascinating. I did a story 2, 3 years ago with the a story for the journal, with the theme being that AI is everywhere. We're all embracing it. And yet, when it comes to investing, we're not yet at the point where we can turn the decisions over to the machines. And you referenced Jim Simons and his firm Renaissance Technologies. They're the greatest hedge funds ever. They're the greatest investment firm ever. And this fund that they ran, Medallion, they still run. My book's about the evolution of that firm. And he was doing predictive algorithms and machine learning and AI in the 1980s, before any of this was in the news and in focus. And yet they are mostly man plus machine, or machine plus man, I think they call it. Meaning they do turn the decisions over often to the machine. The machine really runs things on their own. But it's programmed. The algorithms are developed with humans. And there are times when they make decisions where their system makes its trading decisions on its own and they don't know why, but they do go back and try to figure it out. These non-intuitive signals, as they call them. Mm-hmm. So there's a balance still on Wall Street. That said, I'm now currently working on trying to figure out where things are and whether we're at the point where it's going to be only machine and AI can really run the show. And you would think at some point that's possible. Now, the counter argument is that markets are always evolving. There's new, odd, unusual stuff, Trump and tariffs, that the quants today, Renaissance is having a tough couple months, getting crushed, but they're underperforming. And people are saying, well, it's because of the tariffs and it's unusual and all that kind of stuff. There's always unusual stuff. So we're not yet at the point where we can turn it all over to the machine, but we might get there.
Sure, definitely oversight is needed. I mean, look at BlackRock even. I mean, it's huge, they've really pushed towards AI and so on. And like for me, like we're actually building tools at the moment. We spent like 12 months trying to build this AI tool that will just give sentiment, technicals, and so on. Just like a short overview for people. Like hardest thing with traders, I believe nowadays, especially retail traders, is access to information fast. And that's what the institutions have, and that's what's key to their decision-making processes, right? So trying to build that into the retail space, I think, is absolutely key for guys as well. Perfect. So tell me, what's the biggest challenge do you think actually implementing AI into the trading world will be? From your research, from your understanding throughout that book, I mean, is there one particular? I know you say human oversight is definitely the biggest challenge because that's still needed, right? But is there any other challenges you see?
Well, you would think it's about predicting the future, and AI is really good at developing patterns based on the past. And the future doesn't always model and follow past patterns. That said, Renaissance Technologies and Jim Simons, that's what they kind of did. That was their assumption, that patterns do repeat. So AI should get there, I think, eventually. But there's also just the inefficiency or the efficiency of the market. And are there enough inefficiencies out there? I'm a big believer. I mean, my one takeaway of writing about all this is that you as an investor can find some competitive advantage, but it's like niche kind of stuff. Healthcare, let's say you focus on this, healthcare and new products and such, or some other area. It's really just hard to go up against the big behemoths, and especially with technology being so important and data, as you suggest. But there are corners of the market where you can't compete.
I think, it's all about how AI can get that information, how quick it gets that information, how quick it can turn that information into decision making, right? Because it's like it already knows, okay, if Fed cuts rates, if NFP comes in higher, if, it's awaiting these expectations. And, there's many different kind of multiples of things that can happen within the markets for any decision to happen or for markets to move in a particular direction. But really, that AI is faster at consuming that information and spitting it back out than we could ever be, right?
Yes, I'm a big believer in systems. And if you look at all kinds of industries, they're not winging it. They're not just sort of using intuition and judgment. I don't care what it is. Pilots, before they fly, they've got a checklist that they go through. That's the system. That's
Mhm.
an approach. Surgeons as well. And yet politicians are still kind of winging it. Even the Federal Reserve to some extent. And to me, that just doesn't seem the smartest approach. Man plus machine, meaning some systematic approach. And algorithms are helpful, as you suggest, because they're pre-programmed and they take out to some extent, they combat the behavioral decision mistakes that we all make, the greed, the fear, the panic. I was struck by even Jim Simons later in my research with him. He was telling me about how the market went down one day. This is after he had already retired, and he called up his financial advisor to say, should we be buying shorts here? And I was like, Jim, you are the preeminent quant. You don't believe in just sort of, you take advantage of people that call up their brokers
Yeah, yeah,
in a
yeah.
panic. He'd really appreciate the irony there, but it just shows there's a temptation we all have to just sort of use our intuition and judgment. And to the extent you can avoid that by relying on some even pre-developed system, I do think you have an advantage.
I certainly think intuition now, I think that's something that's built up over years as a trader. And I think that's something that you just can't plug in, right? It's just that capacity to understand sentiment. And I think once AI can consume that and understand sentiment in the same way that we can consume it, I think that's when the switch may, we might see that switch. But I mean, for me, I wouldn't be able to let an AI trade for me. Like for
Mm,
me, it's more about, okay, give me the information really quick, allow
mm.
me to make that decision with that information, and that because I already have a bias, utilize then AI to help my bias and,
I
give me
like
more
that. Man plus
confirmations.
machine. That's good.
Yeah, there you go. And tell me, I suppose we've got a wide audience. Do you have one piece of advice that you'd give to traders coming through or investors coming through that you think that would help?
It's hard to beat this market, man. It's a
Mhm.
pretty efficient market. Find some niche, find some corner, and don't try to go up against the Renaissance technologies of the world, meaning that they are short-term oriented. The multi-strategy firms that dominate nowadays are very quarter by quarter. They look for earnings. They're trying to anticipate what individual companies are going to report. Don't get into that game. You're going up against
Mhm.
these guys, and there's really not that much alpha there. Maybe it means being a little bit longer term investor. If the guys like Jim Simons and the quants are holding it, they call it minutes or moments to months, that kind of thing. Short term oriented. Maybe it's better to try to take advantage of the short term volatility by being a little bit more longer term oriented. But listen, if
Yeah.
I knew the secrets of trading, my friend, I'd be doing it and quitting and on an island. But instead, I get to write about those who know more than I do about this stuff.
Absolutely. I think it's about just finding your niche, right?
Yeah, I like that.
Yeah, so finally, I suppose, what's next for you? Do you have any projects on the go? Any books? What's on the horizon for you? What are we going to watch out for?
I'm writing a book right now, which I'm very excited about. I'm really enjoying the process. It's more historic. It's about sort of Wall Street's greatest hits, as it were, some of the greatest trades of all time, investments, deals. And so I've written a whole section about 1987 and the crash and all the drama behind the scenes, people like Soros and Druckenmiller, Paul Tudor Jones,
Awesome.
people that should have were set up really well, couldn't pull it off. I personally have a real passion for writing about individuals who never quite made it, but should have. They were just as smart, they were just as prepared, they had the same trades set up. Somehow they couldn't pull it off. And a lot of life is good luck and fortune, I find, be it health or otherwise. So anyway, I'm writing about 87, and there's a lot of drama that week that hasn't been reported. And Soros panicked and sold and dumped, and yet figured out a way to turn it around, and admire people that can blow it and yet don't beat themselves up and have the capacity to rebound. So I'm writing a lot about that. I'm writing about in that same book. I'm writing about some historic trades by Buffett and Munger. And so I've had a chance to talk to Charlie
Awesome.
Munger before he passed away, which was really wonderful pleasure. And and I'm grateful for that. So, and there's a lot of cool stuff there in behind the scenes and how they deliberated over investments and figure things out and how they decided on some and didn't, and the people around them and how they influenced them and who they listened to, who they didn't listen to. So that's a lot of what I'm writing about on the side from the Wall Street Journal right now.
Awesome. We've just moved office, and I'm going to build a library, and I'm definitely your books are going up there first, and I can't wait to get my teeth into them and have a read. We'll also put the links in all of our socials and things as well, so make sure to check them out, guys. Thank you, Gregory, for coming on today. Like I said, it's a real honor to get someone like yourself on our podcast. So thank you so much again.
It was a lot of fun, and if your viewers and listeners want to reach out, I'm easy to find on Twitter and LinkedIn and all that kind of stuff. Email, so if they have any questions or critiques, that's fine too.
Awesome. Brilliant stuff, Greg. Thank you so much again.
Okay, cheers. Bye,
Cheers
guys.
now.